Consumers are more confident in the housing industry, but it's a much better time to be a seller than a buyer, according to a recent survey by Fannie Mae. Redfin's chief economist, Daryl Fairweather, joins us now to discuss why some of the homeowners are quiet quitting the housing market. Really? My goodness. Okay, so quiet quitting, how does that show up in some of the numbers that we've been tracking here economically?
Well, homeowners were able to lock in 3% mortgage rates during the pandemic, and they don't want to give those up, especially if they have to move. They're going to be facing a 6.5% interest rate. So they're just bowing out. New listings are down over 20% from last year, which is really constricting inventory and means that if you're a buyer, there isn't much to choose from, and you're still going to be competing for those really desirable homes on the market.
So what is all of this doing to pricing, right? Because on the one hand, if I'm a seller and I don't want to rotate into a higher interest rate in a new house, I would be asking more if I was going to put my house on the market. But if I don't put my house on the market at all, and then there's tighter supply, that would imply higher prices too. So, what's happening?
Well, given how high interest rates are, we would have expected prices to come down a lot, but because there's not any new listings, it means that buyers are still competing. Prices are down a little bit. They're down 3% from last year. That gap may grow a bit, but for the most part, home values have already adjusted to these high rates, and a lot of buyers are looking at the interest rates and just saying well, I want to buy a home, I'm just going to have to put up with it, especially for first-time home buyers.
Are there demographic shifts or shifts in even consumer behavior that you anticipate having an outsized impact on the housing market over the course of this year?
Millennials are the biggest generation. They're entering into that age where they want to have a family, settle down, buy a home, and they're all doing it at the same time, which is why there's still this competition, especially for those desirable homes. Condos, on the one hand, aren't getting much competition because you might as well rent if you're going to get a little condo in a big tower, but those single-family homes that have a yard, that are moderately priced, are still getting a lot of competition.
So demographic effects, let's also talk regional effects. I'm going to call him out. We have a British producer on our team. And he says, I don't understand when you have in this country such a divergence in housing markets, say on the different coasts or in the middle of the country. Talk us through the different trends we're seeing in different places.
The West Coast is being hit hard by these mortgage rates because homes are so expensive. So when you're looking at $1 million plus home, a 6.5% mortgage rate adds up to potentially $1,000 extra a month. A lot of buyers just don't want to stomach that, and they're still moving. They're still leaving these expensive coastal areas for the center of the country, for those more affordable markets. The Northeast and the Midwest have been really stable through the pandemic, and so they're still stable now. And then Florida was on fire during the pandemic and continues to go up in price. People still want to move to Florida.
What about areas that have been more impacted because of weather and how that factors into the consideration of what region you're buying a home in? Where have you seen that kind of either moderate prices or moderate the market in entirety?
For the most part, the climate hasn't really translated to a difference in prices. We did an experiment at Redfin where when we posted flood data, we put some people in the control, some people in the test to see the impact of seeing that flood data. And people did choose homes with lower flood risk. But on net, people are still leaving the more resilient areas for climate on the coast and going to places like Florida, which obviously isn't very resilient, and also the Southwest. People are most concerned with affordability over things like weather or climate.
That seems to sort of set us up for disaster, doesn't it? But that's a whole other conversation. How long does it take to get back to a more normal place in the housing market? What is that what would normal even look like?
We really need to build more homes, and that's where I'm a little bit more optimistic because the jobs report just came out. There are new construction jobs being added. We're seeing builders out there because people can't buy existing homes. There aren't many for sale, so they're moving to new construction. And that's going to help the inventory in the long run. When the housing market does come back, when mortgage rates come back, I'm optimistic that there's going to be more inventory because of this added supply of new construction.
Amid all the talk around recession, and for some consumers, depending upon their economic income scale, they're already feeling that. And so how does that change, even if you're looking for a house, how has that altered where you could potentially pick up savings in a home, say on your energy? Are people looking for more energy efficient homes or ones that they could convert into energy efficient homes as well?
I think that's a really smart thing to look at. A lot of people just look at their mortgage payment or their property taxes, and they don't consider things like how much energy is costing them or water. And water is becoming more and more in short supply in places in the Southwest. So I think homeowners, it is a good idea to look into things like drought-resistant landscaping, to think about insulating their home so that they can heat it more efficiently. And there are these tax credits now from the IRA, which might help them with that.
Sort of on a similar note, we keep asking, it occurs to me, we keep asking a lot of different CEOs, are people trading down? Are people trading down when it comes to houses? Are they looking at smaller houses, for example, right now that are more affordable?
Well, the luxury homes, those big homes, are the hardest to sell right now because if you're pinching your budget, you're going to downgrade from, say, the 4-bedroom with the bonus office to work from home to that 3-bedroom or a 2-bedroom. And there's also a demographic of people, the baby boomers, who are looking into retirement. They may be selling their home, taking their equity, and then buying a smaller home with cash. That way they avoid the whole mortgage problem, and that's probably fueling a lot of demand for Florida, people retiring as well.
And then on the kind of policy pathway that we're on right now for the Fed, I mean, even though they've continued to rise, when there is finally that cut, are we expecting just a wave of refinances out there?
I do think people who have bought a mortgage at 6.5% are planning on refinancing when mortgage rates come down. It's going to be a bit of a timing problem because if they start coming down, they may say, well, they're down to 5% now. Maybe they'll be at 4% next year. Maybe I'll wait. So I don't think it's going to be a wave. I think it'll be more a steady stream of refinances as people seem to want to refinance and get that lower mortgage payment.
Daryl Fairweather, who is the Redfin chief economist. Thanks so much for joining us here on set.
Thank you.